What stood out in the action?
Pretty indecisive day, I think you'd have to say. Pretty flattish across the board, although the fact that yields even slightly are able to lift, right? The 10-year yield managing to hold 1.6. I think that gave clearance for the financials to do a little rebounding, and that was about the story. I think we're essentially kind of idling ahead of Jay Powell's speech tomorrow to just try and see if it offers any clarity or articulation of what the intent is out there in terms of how they're characterizing this period of easing, which is all, universally expected right now.
So, Shawn, so what is the market expectation for Powell right now?
Obviously easing, the question is how much and what sort of verbiage he's going to give after that. And I think the markets are in a situation where it's no win for Powell. If he's too aggressive or too dovish in his thoughts, people are going to go after him for being beholding to the president. If he's not, the markets are going to get hit. So I think he has to walk a tightrope and be perfect.
Why doesn't he just say we're monitoring the incoming data and we'll adjust, whichever way we see necessary?
Unfortunately, you have some of the other people out there over the last couple of days who are the dissenters who are talking about that you shouldn't be doing anything at this point in time. So he's got a problem within the organization, and he's got a problem outside, right? So he's dealing with a lot of cross currents himself, and everyone believes they're behind the curve at this point in time. The question is, can he get in front of the curve? It's going to be really hard to get in front of the curve.
Why is it going to be really hard to get in front of the curve?
I think he just doesn't go 50 basis points. He'll go 25, and he'll talk.
You think he would need to go 50 to get?
I think he would, and I think he'll also talk about how we're going to moderate. We're going to look at what's going on in the world. The U.S. is fine, but outside external shocks could be a real problem. But we look at PMI today and services PMI, right? That's where really the consumer is playing, and that was a weak number. So the consumer has been holding us up at 70% of the economy. If there's any sort of break there, that's a problem.
Can you realistically say, okay, we're going to cut 50, but everything's fine, don't worry?
I don't think he can. That's the problem. I think he's stuck.
But he would have to do that to get a move in yields and the dollar, maybe.
And the dollar, correct.
Yeah.
So the dollar keeps on. If it stays here, it's a problem for the global economy. So he's got to get that lower. Coordinated fiscal policy is the way to go here, but everyone's talking about tariffs, and everyone is fighting with each other at this point in time. So how do you get global coordinated fiscal policy at this point? You can't.
Yeah, I can't get global coordinated anything right
Correct.
now. Paul Hickey, for the week, it looks like every sector in the S&P is higher except for materials. So overall, it's actually been a pretty strong week. What do you do from this point, waiting for Powell with some uncertainty as to what he's going to do next?
I think the setup coming into tomorrow for Powell is probably a little bit better than it was at the start of the day, because we've had, some Fed speakers out all day setting expectations really low. So I don't think we'll be surprised if he doesn't come out and sound dovish. And whereas if he does sound dovish, then the markets will like that. But so I think we've had a nice week this week. We had a pretty bad week the prior week, and it's late August. We tend to see this kind of volatility. But then going forward from here, today your prior guest, Mike Gibbs, was just talking about you don't read too much into this action. It is late August. Things just move around, and it's hard to explain why in August. But going forward, once this day-to-day volatility, falls off and we start to see more people coming into work in September, I think we're set up for a decent chances at a rally here and a move higher to the top end of the range or new highs.
Paul, I know you've also done some work as well on ETF trends, looking at the seasonal trends, I guess, over the last 10 years as well, finding some ETFs that have had consistently positive and some negative returns as well from now until the end of September. So tell us, what'd you find?
Yeah, so it's interesting. We always think about September being pretty bad. Over the last 10 years, the 1 month and 3 month forward periods from now are among the best 1 and 3 month periods for the year based on the last 10 years. And the ETFs that have done well are biotech, which has been up during this period, and the upcoming 1 month period for 10 straight years every year, averaging a gain of about 7%. Brokers have done pretty well. They had a good day today. And you've seen semis do well as well. So those groups have done well, and the market's done well. And what's interesting is on the downside, the ETFs that have done the worst during this period are all fixed income related. And with fixed you wouldn't necessarily buy only on seasonalities or sell only on seasonalities, but we have fixed income at extremely overbought levels right now, coming into a seasonally rough time of year. So some upward move in yields and some downward yields and downward moves in price wouldn't be a surprise right here.
Yeah, Paul.